yeah, BTC, top down analysis on BTC. Okay, so now um first of all, to start down top down analysis, you need to know where you are on the market that you're currently analyzing. And so top down analysis has like three categories. Maybe if you're a day trader, you should start your top down analysis from the 1 day time frame than the 4 hour. Then if you're a swing trader, your top down analysis should start from 1 month down to 1 week, down to 1 day, then the 4 hours time frame. So I'm currently on the 1 day time frame, and yeah, looking at BTC, we can see an uptrend. Yeah, this is a obviously a pure uptrend. Like, this is a trend line, though it's not looking too good, but yeah, that's a trend line. So starting from here, we can see the break, and the one I'm most interested in are these two recent break of structure that happened here. This is the first one. Sorry, let me put this here. This is the first one, the first break of structure. Then a kind of liquidity sweep that happened up right here. Yeah. So this is a liquidity sweep, and that is obviously the reason why price is going down. So now, looking at this stuff, there are some POIs that we're interested in here. Look at this. This liquidity sweep here makes this low a protected level. This is a liquidity sweep. So this low here is a protected level. Price should not go beyond that. So this other block here, we're not interested in it because is a liquidity sweep happened here. So the first POI that we are looking at is this one here. This one here. Then is looking mitigated on this 1 day time frame, but okay, let's mark this out. Let's mark this one out. These are levels that are unmitigated that we are expecting price to buy back from. But for me, this will be my this one I'll be most interested in, because this one has inducement here. Has inducement here. So now you have built your bias from the 1 day time frame. Let me delete this one. So you are now building your bias for day time frame. You can see a break of structure and the liquidity sweep up here, and the market is going down to a POI. So it's either the market comes to a POI and buys, or the market just keeps going down, to wherever it wants to go to. You get? So that's two options we have. But from what we are already seeing, we are bullish. So now the next thing you do is you go down to the 4-hour time frame. Then you start looking up the market from there. So looking at this, we can see this place is valid. You can see an inducement here. So you can mark this one out as the inducement rather than the one that we marked out before. That's inducement. So you can mark this one out as your inducement, and the market is moving there with speed. So I think that is where the market wants to get to before it buys. You get? So after that, you can see this one also valid, engulfing by FVG and all. But this looks like a breaker block. This is looking like a breaker block. So this is the most valid POI that is there. So now, looking at this, you can see liquidity sweep up here. After this liquidity sweep, there was a change of a shift here, a shift to market structure there. After that, you can see the consequent breaks, react to POI, break, and the market is currently going down. So what I'm looking forward to is the market to come into this place and give me a confirmation, which is the A plus setup structure, then buy back up to maybe a new all-time high. So you are seeing this on the 4-hour. This is what you are waiting for, but will you wait for that forever? Definitely no. You won't wait for that forever. So right now, you know that the market is going down. You can see a recent break of structure here. What's going on? Excuse me guys, let me off this. Okay, yeah. So you can see this break here, yeah, break of structure, then another break here. So you know that the market is going down, is in a downtrend. Sorry, not break of structure. So you know it's in downtrend. So next thing you do is you move on to the 30 minutes or the 15-minute time frame. Let me use the 15-minute time frame in this perspective. So in the 15 minutes you see a break here, a break of structure as marked out in the higher time frame. So what are you now looking forward to? Looking up, are there any unmitigated structures here? There's too much noise here. Let me go to 30 minutes. So. Okay, yeah, so this is your break of structure. The market reacted from the breaker block. You can see the breaker block here. A breaker block, a break here, and a break down here. And your breaker block is somewhere around here. This should be more visible in the higher time frame. Somewhere around there. Yeah, somewhere around there will be your breaker block. Then you see the break of structure here. Then something. Oh, this breaker block here. Okay, yeah. See this. Look at this. You can see a break here and a break here. So we have another breaker block here. This is the first POI we're looking forward to. The first breaker block here. Then there's an other block up here. Though this other block will probably not hold because it's looking very invalid, because you see other blocks that come like this. Now this is the other block, and this is the next candle after the other block, that in a sell narrative. So I think this should be red and this one should be green. I think so, and I hope so. So now your main concern is the wicks. So a valid order block should have a wick that looks something like this. Sorry, I'm missing something here. Okay, look at this. Yeah. So now this a valid order block should have something like this, whereby the wick of the other block clears liquidity off every wick that came before it. So in a case whereby the wick of the block is something like this, and the next candle after it has a very high wick, is an invalid order block. So most times the market will just come. Do something like this, go up, come down, and instead of reacting for another block and going down, it will go off to clear the liquidity of this wick and before continuing its movement down. You get? So that's it. So if the market wants to sell, what I'm expecting that the market will come up to this point, give us a confirmation, and boom, go down maybe to the higher time frame POI that we marked out. So yeah, that's how you basically do top down analysis. So if you want, you can go lower to the lower time frames to see if you can catch some entry, but me, I love to stop at the 30 minutes time frame so I don't complicate myself too much. So I think